Imagine waking up one morning and realizing that the biggest gains of the decade were happening right in front of you, but you didn't even see them. Because while everyone else is busy talking about crypto, the Fed, interest rates, and whatever stock is trending on social media, their real money, the quiet money, is flowing somewhere completely different, and almost nobody is paying attention. But Wall Street is. In fact, they're already moving, quietly loading up on robotics stocks. Before the rest of the world notices what's about to happen, and once you see the data I'm about to show you, you'll understand exactly why. Today, I'm going to walk you through what's really happening behind the scenes, why robotics is being called the once-in-a-generation gold rush, and which companies smart money is preparing for right now. Long before the headlines catch up, because by the time the mainstream investor realizes what's going on, the biggest upside may already be gone. Now, before we dive in, let me just say this. I'm not here to hype anything. I'm here to show you the facts, the money flow, the market shifts, and the technology curve, so you can decide for yourself whether robotics belongs in your portfolio. But I'll warn you, once you understand what's coming, it's almost impossible to look away. So if you're serious about investing, if you're serious about getting ahead instead of reacting to the news 2 years late, then stick with me until the very end. So here's the truth nobody is talking about. We're stepping into the largest automation cycle in human history. Bigger than the rise of the internet, bigger than smartphones, bigger than AI by itself. And Wall Street knows this. When you track institutional fund flows, the quiet money that does to make the news, you see something strange. Robotics ETFs have seen inflows increase at nearly triple the pace of the broader tech market. That's not retail traders. That's not hype. That's long-term capital positioning itself early. Why? Because robotics isn't something that might happen someday. It's happening now. And it's accelerating faster than anyone predicted. In 2022, the industrial robotics market was worth around $16 billion. In 2023, analysts bumped the forecast to $30 billion by 2030. But now, some Wall Street research desks are predicting it could hit $80 billion or more. And that's just industrial robotics. Not home robots. Not medical robots. Not warehouse automation. When you add it all together, robotics could quietly become a trillion-dollar sector sooner than people think. But here's where it gets interesting. Because robotics is not like the AI boom. AI created the demand. Robotics fulfills it. AI is the brain. Robotics is the body. Everywhere you look, there's pressure to automate. Labor shortages, aging populations, rising wages, supply chain instability. Companies are realizing, if we don't automate, we fall behind. And trust me, once a company automates, they never go back. That's why you're seeing companies like Amazon rolling out over 750,000 robots in their fulfillment centers. That's why Tesla is pushing up. That's why hospitals are now using surgical robots for procedures that were unthinkable 10 years ago. And this is exactly where Wall Street is positioning early in the companies supplying the picks and shovels of this new robotic gold rush. Now let me take you deeper into the secret, because there's something even bigger happening underneath. They look at efficiency curves, and what robotics is going through right now is the exact same pattern solar went through in 2010, smartphones went through in 2007, and computers went through in the 90s. Rapid cost decline paired with exponential capability growth. We're talking robots that used to cost $120,000, now dropping under $40,000, really becoming 10 times smarter, thanks to AI. And when costs drop and performance rises at the same time, adoption explodes. If you've studied investing patterns, you know this is where the biggest multi-year upside comes from. Not when a technology is hyped, but when it silently crosses the affordability threshold and begins mass adoption. Let me give you a quick story to make this real. He said 5 years ago, he would have laughed if someone told him his factory would be 60% automated. Robots were too expensive, too complicated, he said. But today, he has more robots than human workers on his assembly line. And he said he wishes he bought them sooner. Why? Because one robot doing repetitive tasks costs less per year than a human worker's monthly salary in many regions. No sick days, no training, no turnover. And the robots get better every month because AI improves their performance through updates. Once CEOs experience that, they start ordering more robots automatically. This is why robotics demand is exploding behind the scenes, even though retail investors barely talk about it. Wall Street knows these stories. They hear them directly from management teams, and they're investing accordingly. If you zoom out, robots are following the exact same S-curve that cars followed, that computers followed, that smartphones followed. The early adoption stage was slow, expensive, experimental, but now we're entering acceleration. The moment when the curve starts bending upward sharply. This is when a market goes from niche to unstoppable. And this is where fortunes are made for investors who position early. You know who invests the most during this stage? Not retail, not YouTubers. Institutions, funds, hedge funds, pension funds. These guys aren't trying to time the news cycle. They're positioning for a decade of growth. And robotics is one of the only sectors with growth that is mathematically baked in. Because demographics and labor trends guarantee it. Think about it. By 2030, the US will be short 2 million manufacturing workers. Japan is already shrinking. Europe is aging. China's labor pool is declining for the first time in modern history. Who fills the gap? Robots. Not because of some science fiction idea, but because companies literally won't have a choice. They're buying exposure in companies that make industrial arms, warehouse bots, surgical robots, robotic chips, and autonomy software. Now, let's talk about the types of companies they're targeting. Not recommendations. Who's patters. First, the robotics hardware leaders. Companies building the arms, greepers, sensors, and mechanical components. Second, the AI-driven robotic software companies. The companies teaching robots how to see, think, and interact with the physical world. These are the brains. Third, the component suppliers. Companies making the high-precision motors, cameras, and chips that every robot needs. These are the picks and shovels. And finally, the integrators companies that take all those components and deploy them in factories, hospitals, and warehouses. When Wall Street accumulates quietly, they usually spread capital across these 4 buckets to capture the entire value chain. Because Wall Street isn't just buying robotic stocks, they're building long-term positions, not short-term trades. When you analyze institutional holding patterns, you see increased ownership in robotics over multiple quarters. That means they're not flipping shares, they're holding. That's not speculative behavior. That's conviction. And when big money shows conviction, retail money eventually follows. Often too late. Now, here's where emotions come in. Because the truth is, most people will miss this wave not because it wasn't obvious, but because they were distracted. They were waiting for a perfect moment. They were waiting for the news to validate their choices. But the stock market doesn't reward people who wait for certainty. It rewards people who position before the story becomes mainstream. And robotics is exactly one of those stories. You don't need to time the market perfectly. Let me paint a picture for you. Imagine a world where warehouses operate 24/7 with robotic fleets. A world where homes have robotic assistants. A world where companies use humanoid robots for tasks that can be automated by machines on wheels. This isn't science fiction. This is the next 5 to 10 years. And Wall Street isn't betting on maybe. They're betting on inevitability. Because the combination of AI plus robotics is not optional. It's destiny. Now here is something most people don't know. The moment AI became cheap enough to run on device, meaning robots, no longer needed expensive cloud computing to function. The economics changed instantly. Suddenly, robots became scalable. Suddenly, one software update could make a robot twice as capable without needing any new hardware. That is why robotics companies are now being valued more like software companies. High-margin recurring revenue models, service contracts, updates, and subscriptions. And that's another reason Wall Street is quietly positioning. Recurring revenue. Companies pay for software, maintenance, upgrades, and automation services for years. It's sticky revenue, predictable revenue, and Wall Street absolutely loves that. Because if you've been watching the AI boom and thinking, I missed it, this is your second chance. Robotics is where AI becomes physical. It's where AI leaves the screen and enters the real world. This is the part of the cycle where everyday investors can still enter before the massive wave of mainstream attention hits. I want you to think back to the people who invested early in NVIDIA, when it was just a gaming GPU company, or the people who invested early in Amazon when it was just an online bookstore. Robotics today feels very similar. It's early, it's misunderstood, and it's about to become essential. Now, here's the real question. What are you going to do with this information? You've just seen what's happening behind the scenes. You've seen the trends, the data, the institutional moves, and the long-term forces shaping this industry. You understand why Wall Street is buying and why they're doing it quietly. So ask yourself, do you want to be the person who looks back in 5 years and says, I wish I paid attention to this? The choice is yours. But if you found this video valuable, if you learned something new, then take a moment. Hit that like button. Subscribe for more deep dives like this, and drop a comment telling me which robotics or AI company you think has the biggest future. Your support helps this channel reach more smart investors like you. Thanks for watching, and I'll see you in the next one.